Hey there, welcome to AccuTrade, and in today's quick video we're going to be explaining in a bit of detail how to interpret the levels on both AccuTrade 3.1 Pro and AccuTrade 3.1 Starter. Now the difference obviously between the two, the Pro and the Starter, is that the Starter can only be used on charts with a time frame of 1 day and upwards. In other words, you cannot use it for intraday trading. However, with Pro, you have access all the way down to 1 minute and beyond. In addition, you'll find that in the settings of the algorithm, on the Pro version, you have refresh rates or periods. However, this will be changed to refresh rate in the next update. You have a whole lot more settings here: year, month, week, day, 8 hours, 4 hours, all the way down to 1 minute, and you also have same as symbol. So we're going to get straight into it and start explaining what these levels mean. Now you've got 9 levels here, as you can see. 4 of them are red, 4 of them are green, 1 of them is blue. Now if you already have an understanding of what resistance and support is, you're halfway there, but if you don't, that is okay. We're going to cover that right now. So we'll start with the center level here, the blue level named pivot. Now pivot, as the name suggests, is the level around which the chart tends to pivot. Now this is applicable for the period that has been chosen. So for example, if we go back to the settings up here, you'll see that the period or refresh rate, like I say, this will be changed in the next update to say refresh rate. You'll see that the setting here is month. So what this means is that every month these levels will alter accordingly. So you can see that we are currently mid-month, and at the end of the month this little arrangement here is going to be updated and the levels are going to move. So it's going to give you the key levels for that month. If you had the setting on week, you would find that it would be altering itself every week to give you fresh levels for that week. Now for the example, we're going to be on a 1 day chart, so daily, as you can see up in the top left corner here. And so I find that it is most ideal to use 1 month for the refresh rate or the period, as they're a little bit further apart and they don't update quite as frequently, which is good. So going back to the pivot, now obviously the pivot is the central point. It's sort of the hub, I guess you could call it. Now from here we're going to go up to the two that you've probably heard of already, support and resistance. Now these are the major levels of support and resistance, meaning the levels which the chart will tend to bounce off of or react with quite a bit. Now resistance obviously is always the level at which the chart seems to react and has the highest chance of turning around, at resistance being a point where it has a little bit of trouble getting through. Support is quite the same thing, just on the opposite end of the spectrum. So where you've got a level of support, it tends to support the price. So support and resistance, not too hard to understand. I guess for an analogy, you could say the resistance is the ceiling, the support is the floor. And if you have a bouncy ball and you chuck it at the floor, it's going to bounce off the ceiling, off the floor, off the ceiling, off the floor. That's the idea. So away from support and resistance, although just a quick note here, you can actually see, if you look back to the left of the resistance label, you will see that that level is very accurate. It has held its resistance here quite consistently and then obviously dropped down here. It has also played a key level for support in the past, but obviously back here these levels would have been different, so that would have been a support level. But obviously here it's become a resistance level, so it has picked that out quite nicely. So that's support and resistance. Now in between the pivot and these two support and resistance levels, you're going to see intermittent support and resistance. Now these are levels which have been included because they are quite important, but not a lot of systems out there mention this level, or these levels, I should say. Now these levels here, intermittent support and resistance, are sort of halfway points, I guess you could say, halfway points which are also of significance. As you can see here where the chart is sitting right now, that is still a level of importance, and this level, these levels can be traded quite successfully. Now, if these levels weren't here, you would just be running between pivot and support and resistance as your major movements. However, having these levels in between allows you to have a little bit more of an opportunistic time trading. You will find a lot more opportunities because you've got an extra couple of levels there to work with. Now, moving on, you're going to see extension 1 on each end and extension 2 on each end. Now, these are very important levels, and there is a little bit of an explanation on them on our website, on the membership and pricing page. Where you scroll down, you will see some explanations on what these levels are, but we will go over them in here as well. Now, extension 1 is basically an extension past resistance or an extension past support. Same as extension 2. Now, what you're going to find is that when the price point reaches extension 1, it has a very high likelihood, usually in excess of 75%, a very high likelihood of taking a direct retracement back down to resistance. Similar on the bottom here, if it hits extension 1 in the support area, it has a high likelihood, over 75%, of retracing back to support again directly. Now, on the odd occasion, you will find that it will go through extension 1, might not directly retrace, but it will find its way back again within a few candles. That can happen, but that doesn't put you in any danger. The likelihood of a retracement here is very high. And similarly for extension 2. Now, if price point reaches extension 2, there is a very high likelihood, again, this time over 80%, of a direct retracement back to extension 1. And of course the same goes down here on the bottom in the support area. Extension 2, there's a very high likelihood of a retracement to extension 1. So what you can do a lot of the time is you can actually place entries in advance if the market isn't moving too crazy. And what you can do is you can place your entries here and same on the bottom. For example, if you put a sell limit order here and a sell limit order here, and the chart came up here nicely, opened this trade here, came back down here, and you had your first target set here to close this trade out, and then you had your second target here to close this trade out, you would get 2 beautiful trades in one go. Now, as I said, these are very high likelihood areas of retracement, so these are perfect opportunities. If you ever see the chart around an extension level, you should definitely perk your ears up. Now, what we're going to do is we're just going to play through a little bit of a chart roll through just to show you how this interprets or how it interacts with the levels in real time. Okay, now as you can see, the chart has found a little bit of a base here on this intermediate support line. So we're just going to roll through and we're going to see how the chart interacts with the levels shown by 3.1 Pro. Now, obviously you can see here, now the giveaway here for this breakthrough down to support was there was consolidation here above this level. Now, generally, when you see consolidation here, it's a pretty good sign that there is going to be a breakthrough because it's hanging around this level and it wants to make a move through. Otherwise, you would usually see it bounce straight off again. So this consolidation here gives a pretty good idea that, hey, something's going to happen here. So we've had a breakdown to support, and that just touched it. As you can see, the wick of the candle came out the other end, so that was a pretty precise movement there. And then obviously we had a little bit of a reaction to that level. It's found a base at support, and it has come straight back up to intermediate support. So what you would have been able to do here is you would have been able to get a nice trade out of this movement here, having your opening here at support, your close at intermediate support, and if you wanted to have a stop loss here, you could have put a stop loss somewhere along this level here. Or if you wanted to give yourself a little bit more room, you could have run it all the way out to extension 1. Though, as you can see, it would have been quite comfortable sitting here. As you can tell, there was not much resistance for it to turn around and go straight back. Now, if we continue with this chart roll through here, we're going to see that it's quite liking the intermediate support, and then it rolls straight back up to pivot. Now, what you could have done here is you could have seen here that it tried to reach up towards pivot, had a little bit of resistance, ducked back down again, but came up again above it. And right here, it gave it a little bit of a retest. You can see the wick here, it gave it a little bit of a retest. That's a pretty good sign that it's going to go in the upward direction, because it's getting above it again. It's not really staying below it too much. It tends to be fairly buoyant. It's coming up above. It gave it a little tap, and so therefore that one was good all the way to pivot. So you could have, once again, you could have traded this quite beautifully, and you could have had your stop midway again, midway between the levels here and your target here, and that would have been quite a nice risk to reward trade. Now moving on, now it's reacting with the pivot level, the central level, and obviously now this here is going from a Friday to a Monday. So you can see there's a bit of a gap here. Obviously when you see these gaps, that's where there has been a weekend and the market opens at a slightly different price. Now going on from here, you will see that it had a bit of a tap. I guess you could call it same as down here. It had a little bit of a tap of that level. Now, if you're keeping an eye on your chart's time and day, you will know when the next refresh is due to happen. Now, we know in this one that the next refresh is due to happen within the next couple of candles, as we are almost at the end of the month. So we need to be wary about the levels we are trading because of the refresh that is about to happen. And of course, the levels will change. This is what keeps you up to date and gives you the most up to the minute levels. So we're going to watch what happens here. Now, obviously, if you had have placed that trade at that previous level, you would have hit your target beautifully, even though these levels have changed. That tap I talked about at the pivot, that worked beautifully regardless of the change, the refresh. That still would have hit its target nicely, as you can see. Now, going on from here, we're just going to move this up a little bit so you can see the levels a bit more clearly. And now it's running down through support. Now it's getting close to extension 1. This is obviously a point of interest. Whenever it gets close to that level, it's always worth keeping an eye on. Obviously, it's liking the support level a lot, and you can see just how accurate this support level has been and how you could have actually traded this a couple of times and done pretty okay out of that. Now, watching on. Now, here is a perfect example of touching an extension and retracing straight back. Now, if you had been paying attention at this particular point, you would have seen, okay, it's getting pretty close to extension 1. The market's not too crazy. It isn't doing big out there movements. The candles are relatively small. So you would have known, okay, pretty safe to place an entry order at this level here, extension 1. So you would have placed what is called a buy limit order, and you would have set your target here at support. Or if you want to, you can set your target further. You can go up to intermediate support if you so choose. Now, what you would have noticed is within one candle, which in this case on this chart, it's a 1 day. So within this 1 day, the price would have come down here. It would have opened your trade. It would have come straight back, and it would have closed your trade. So you would have made a nice, cushy little profit out of that. And moving on. Now, as you can see, we've just had a new refresh. The levels have changed again. And you can see now it's been sitting under pivot, which before was support down here. This was extension, but obviously now this is your intermediate support now. We've had a nice push up into intermediate resistance. A beautiful bounce off of the resistance level there. Followed by, now this is another perfect example of extension 1. Now you can see here it's come up into extension 1. and it has turned around and come straight back down again into resistance. So that would have been another very ideal trade. And this is what happens most of the time with these levels. As I've said before, highly likely that there will be a direct retracement. Now we'll watch on a little bit further. Now she's gone up into extension 1 again. Let's watch on. It's now hit extension 2. Now this one has given us a direct retracement from extension 2 back to extension 1. So that would have been a perfect trade right there. From extension 2 down to extension 1. And of course, going on from here, you would have seen a beautiful continuation through here and down to resistance. So if you had your orders set at extension 2 and extension 1, and your targets set at extension 1 and resistance, you would have been doing pretty well over those couple of days. If you had been paying attention, you would have got a beautiful trade from extension 2 down to extension 1, and of course from extension 1 down to resistance. Now we'll just zoom out so the angles are a bit easier to interpret. Now, as you can see here, there's been another push up to extension 2. As I've said before, always good to pay attention when it is around these levels. It's always good to pay attention. You can get very good little trades out of this particular zone because of its high likelihood of retracement. Now, what you've just seen here, we had a time frame change. Now, both of these orders, had you placed both of these orders would have closed out perfectly in profit. Now, although we had a time frame change, your first order from extension 2 to extension 1 would have closed out about here. It's just under this wick, so here. And of course, your extension 1 to resistance would have closed out here. So even if there's a time frame change, while you've got a trade on or trades on, just keep the trades open because it can still honor those trades very well, as I've demonstrated a couple of times now in this video. It's come back down here and you would have had, once again, 2 perfect trades. And that brings us to the end of this quick training video on AccuTrade Pro and AccuTrade Starter. Now, obviously, the more time you spend using these algorithms, the better you will become. It can seem a little bit complex at first, but as you spend more time familiarizing yourself with it, it will become a lot clearer as to how this works, and you will find it a lot easier to pick which direction the chart is going to move next. Obviously, a good way to do that is by back testing, rewinding your chart and playing it through, or sitting there and watching it in real time. Either way, it's going to give you a good insight into how the charts interact with these levels. Now, just before we go, we'll just once again cover the difference between Pro and Starter for those who aren't quite sure still what the differences are. Now, as a Pro member, you can use this algorithm on all chart time frames all the way down to 1 minute. So you can do intraday, you can do intra-hour, you can do whatever suits you. And you can also adjust your refresh rate accordingly, all the way down to 1 minute. However, on the Starter, you only have access to the algorithm on charts 1 day or above, meaning you can trade the daily chart and over, but you cannot trade intraday. And you have the refresh rates to match that. So you will have week, month, and year in the refresh settings. The reason for this difference is obviously because trading on a daily chart and above is a lot safer, slower, and more predictable, so it is perfect for new traders. However, when you start getting down into the lower time frames, things tend to move a lot quicker, and so obviously this is more ideal for seasoned traders and traders who have a fair idea of what they're doing. Alright, well that brings us to the end of it. If you have any questions, if you have any queries, feel free to reach out to us either on the support page or on our live chat. We are always more than happy to go out of our way to help you and get you on a roll with these algorithms. Once you get the hang of these things, you will see just how powerful they really are.